Let's understand NAV or net asset value in mutual funds. So NAV is the value of funds asset minus liabilities. NAV is calculated on a per unit basis. So the formula to calculate NAV is market value of all securities held by the fund plus cash equivalent holdings, that could be your interest or dividend, minus fund liabilities, any expense that you need to pay for this fund scheme. The whole should be divided by total fund units outstanding. Hence you can see once it is divided by total funds units outstanding, your NAV becomes per unit basis. NAV is important because they determine the value of the investor's current investment in that mutual fund scheme. It is the price at which new units of the scheme are bought and sold. So whatever you invest into mutual fund, so suppose you are investing 1000 rupees in mutual fund and NAV for your mutual fund is 100, that means you get 10 units of mutual fund. They provide the base for comparing the performance of various schemes. So NAV becomes the basis that you can compare different growth schemes by different mutual fund companies.